So let me just take a minute to explain how Wall Street thinks. And I know it's been a very, very rough 2022 for pretty much everybody that is watching this video, especially if you own stock. If you've made a lot of money, well, congratulations. Not everybody has. And some people want to know when the pain is going to end. And that is something that we are going to talk about here in this video. But most importantly, we have to understand how Wall Street thinks to be able to profit from it. Now, how Wall Street thinks is when things are good, a certain sector is good, it will always be good. That it's never going to go away. That's why, for an example, during 2020, something like Zoom went from $59 to $588. This stock 10x'd in value under the assumption that we were going to use Zoom for the rest of our lives, which the average person could have seen the end of the pandemic eventually coming and people not using Zoom as much. So what does the markets do? They run the stock up 10x and then they sell the thing off back down to almost its pre-COVID levels, even though the business has gotten better every single quarter, has been growing revenue. Now, this is not a video to vouch for Zoom. It's to show you guys the perspectives of how the markets are thinking and to put our recent moves into a little bit of context, because the stock market has been doing pretty much nothing but going straight down. If you look at the daily candlestick chart on the S&P, I mean, you're down, and you're down quite substantially. You're down over 20% in the S&P year to date. Since 2022, and you're down well over 20% in the NASDAQ. Russell 2000, that thing has been a goner for a very long time. And this all pertains back to AMC stock. So now we're in a situation where the markets are looking at potential growth slowing down in the economy, which I do think growth will slow down. Certainly not to the extent that the markets are expecting. Right now, the markets are literally acting like growth is never going to happen ever again. They are expecting a 5 to 10 year long stagnation, right? Stagflation is what it's called. Stagnant growth, high inflation. Is that going to be the case? Do you really think that's going to be the case? Absolutely not. If you think about the economy in 5, 10, 20 years, 30 years from now, what do you think it's going to look like? Well, it's going to be a lot different. It's going to be a lot bigger, and you're going to be looking back and wished you invested during this time. Now, besides all that, what is actually affecting the markets right now? Because we can, go through all of these scenarios about what the economy could potentially look like 10 years down the line, but what does it matter if you're going to lose money hypothetically for 10 years? Now, that's obviously not the case. Let's talk about what's going on with the markets right now. So the markets, they're looking at inflation and they're saying the Fed is wrong, which granted, the Fed has not really been right this whole time, but I think it's very naive and very uneducational to just say, hey, inflation is going to be here forever. The Fed is going to raise rates until the economy is worse than '08. You could say that all you want, but if you don't have any data to back that up, there's no point in saying that. So I'm not going to sit here and say that. Yes, I do think inflation is high. Yes, I do think there is a cause for concern in the markets. But at this point, and if you've watched this channel, I have stressed this exact thing, a market crash coming down 20-25% since last November, December. We've been talking about this, so this is no surprise. It pretty much played out exactly how I've been forecasting it to play out. Now, do I think it's over in the grand scope of things? Probably not. But I think the level of absolute carnage that you have seen to stocks like AMC, to other higher growth stocks, is really, really overdone. Like a PayPal down almost 60% on the year, right? AMC down dramatically from its highs. Square down dramatically from its highs. Shopify, basically everything besides Apple, Microsoft, Tesla, Google, and some of those stocks are even down 10+%. But those are the ones that really control the markets. So you've seen a lot a lot of pain in the markets. And at this point, it's very hard to be bearish because we've rapidly repriced things. And the markets right now are pricing in very, very high interest rates, which I don't think the Fed will stop raising rates. But the markets also expect inflation to continue forever, like I just said. So there's a lot better chance here, especially this next week, the event we're going to talk about, to potentially see a massive rally. And you need to see fundamental changes. Like, the markets are not going to wake up one day and say, yeah, I think we sold stocks off too much, we should start buying these stocks again. They're not going to do that. If you think that, that's a false reality. It's absolutely not going to happen. But what the markets will do is they will wake up to a fundamental good news or data point, and they will say, hey, maybe we were wrong. Maybe inflation will come down. Maybe the Fed will not have to raise as aggressively, and that's when you could potentially see a 3 to 5% rally on any given day here in the markets. Now, I don't know if it'll happen this week. I think there's a really good chance that you do see a comeback, and we'll talk about exactly why. You are actually seeing a triple bottom here on the S&P as well, which we'll dive into all of the details of the situation. But long story short, the markets will not crash until the fundamentals dissolve of your top 10 holdings in the S&P 500. Apple was up over 1% today. Why is that? Well, they reported decent earnings. They reported actually good earnings. They beat on basically all metrics. Even last earnings, they missed on their iPad sales, and they well above beat expectations this time around. Now, I am not the guy that's going to be saying to buy Apple or any of these stocks. I'm not a financial advisor. But you cannot really drop like what people expect, like 30, 40, 50%, unless fundamentals really dissolve at these companies. And I think they will, to a certain extent, later throughout this year, but it's not right now. We just got a lot of uncertainty taken off the table. We know what to expect from the Fed at the next two meetings. We know when the balance sheet will start to be reduced, right? We got that. We also just got all of the large tech stock earnings. That's three things that are really uncertain, taken all off of the table. The markets hate uncertainty more than they hate bad news. That's why typically heading into a fear catalyst like we've seen during the last day of the Fed, and obviously the markets rallied very, very hard to be disappointed by what the UK did by raising rates and saying there's no chance of a soft landing, that there's going to be a deep recession over in Europe. Fine. We're not Europe, which I do still think there's going to be, to some degree, a recession, but definitely not like an '08 like Europe is pricing in. But that's why you've seen a huge market rally. We closed up over 3% on the S&P after the Fed spoke. And not everything was all peaches and roses. There was definitely some bad things to point out. But overall, the markets had expected far worse news, just pricing in the absolute worst. And that's where things are currently at, sitting here at basically the yearly low was 405.02. Now, we came down and actually touched this yet again today at about 405.73. So it's showing you that until the fundamental picture really dissolves, then you're not going to see a major market sell-off or a continued crash, really under 400 on the S&P in my personal opinion. Now, what is even causing these 405 bounces? Well, like I said in the last video, the issue right now is if people expect slowing growth and high inflation forever, obviously, inflation, when it's high, it makes your earnings, say in 2025, less valuable because inflation destroys your buying power of the dollar or any other currency for that matter. So it's hard to value companies if you expect a lot of high inflation, but it's even harder to value companies if you expect growth to slow down. Like, where do you value Apple if you expect the consumer to slow down dramatically? Where do you value that stock at? Right? There's a small chance there isn't a big slowdown. So that's a little bit of positivity there, right? A little uncertain positivity, you call it that. But you don't know where to price these stocks. That's the thing. That's the situation that we are currently in. Sure, earnings were good, but if everybody expects inflation to last forever and growth to slow down, how do you price them? Where is the fair value? Where should you come in and actually start to buy these stocks? That's why I say a fundamental good news kind of catalyst like CPI potentially on this upcoming Wednesday, May 11th. If that comes down, again, this will be the third straight month of declining core CPI. Core CPI again being inflation minus food and energy, the things the Fed really cannot control at all. If that comes in lower than expectations again and declines again, that will be the third month in a row where core CPI has actually declined. That's going to say to the markets, hey, maybe we're wrong about inflation. Maybe we're wrong about the Fed raising rates until the economy just ceases to exist. And the bond markets are expecting the opposite. The bond markets are literally expecting things to be bad forever. Now, who knows? They say the bond market is right more than the stock market is right. And you can see this parabolic move in yields, literally a very historic rally, just straight up. Like bond yields have went pretty much straight up. Now, at this point, you're getting back to those 2018 highs. So I think there's a decent chance that any small bullish data point like CPI data could push down bond rates in a big way and could thus push up stocks in a very dramatic way. Now, the long-term bullish thesis of the markets is hard to grasp right now. We'll call it that. Basic Econ 101, what I've been saying here forever now, the last 6 months. When you have an economic expansion and you just give out free money, people spend it. It makes earnings great. What happens during a normal year? Well, when there's no stimulus, it's hard to say, what companies should be valued at. A lot of artificial demand comes in when you give out 25% of your money that is in circulation just out to people randomly. Of course, you're going to overvalue stocks for a period. That's the biggest concern. So I don't think we've hit like the 2022 yearly lows. I think that will happen when earnings are bad, but we at least have 3 more months before we could potentially see really bad earnings again because we just had earnings. So I think we're due here in the next couple of weeks, maybe in the next month or 2 months, to see a decent size rally in the markets. I would target, that 440 level, that 435 level. That's what I think a decent rally could look like here in the markets. I don't know about 450. It's possible, but those are really the levels that I would target. Now, if you do look at the S&P on the daily candlestick chart, here's the triple bottom that I'm talking about. So it's really a descending triple bottom, which is even better in my personal opinion. You're saying, hey, you're coming down, testing lows, finding a lot of support, and then heading back up literally intraday. This is happening intraday. Right here, this I would consider your first low right here, your second low, your third, and then ultimately your fourth low. If you just want to consider this 1, 2, 3, there you go. But this is showing signs of at least demand around 405, and this is seen as a very bullish thing in my opinion. The MACD is almost as bearish as you could possibly get. Like it's not good at all. The RSI extremely bearish as well. The put to call ratios are extremely bearish. Like everything is bad when you're talking about the markets. Market sentiment, people expect the end of the financial system. Like they're pricing certain companies like they're never going to grow ever again, which who knows, maybe they don't, but this is literally how Wall Street thinks. When things are good, they're always going to be good. When they're bad, they're always going to be bad. And, I just want to say that until fundamentals really dissolve, until next earnings season, you're not going to, continue to crash another 20%. Sorry, it's not going to happen. For anybody that's going to be upset by this, I'll tell it to you how it really is, because Wall Street is very unrelenting. Monday could be a massive green day, right? That's also something that is noteworthy to point out as well. May 9th comes on Monday. That is Victory Day for Russia. And let me refresh my memory exactly what, bear with me for a second. Victory Day is, for Russia, exactly what it is. I think it's when they defeated Germany at Stalingrad. But there is also some things that people have been saying, right? Yeah, it says in Russia, Victory Day is a holiday that commemorates the victory over Nazi Germany in 1945. It was first inaugurated in the 15 republics. Okay, so yeah. Now, there's a lot of talk about how Putin wants to end the war May 9th. That's a fundamental catalyst. If that happens, then I'm sure you would see oil prices come down just off of the news of that, and you would likely see stocks rally through the roof. Because that's a huge level of uncertainty that would be taken off the table. Now, I don't know if that's going to happen on May 9th, but that's what a lot of people have been saying, right? So, I'm not a fortune teller in that regard. It's possible. It's improbable, but it is possible and something to keep in mind. Also, CPI data as well. That comes in again, really good. Then you should have enough fuel in the tank to really see another big run in the markets. Now, I don't know if it would be sustained, but we know what to expect from the Fed. We just had earnings. If we get any other catalyst, what I'm basically trying to say is the markets are going to rally. Like from here, it's very hard to see things getting worse. On a fundamental basis. Who gives a shit about anything else? On a fundamental basis, China would have to lock down the whole entire country. Russia would have to nuke Ukraine. And the Fed would have to come out and emergency style raise or cut rates. Those are really the things that you're looking at that could potentially break us under 405. But are those things likely at all? Are they like moonshots? Probably. So, there's not a huge reason to be bearish given stock valuations and given where we are currently at, especially in AMC stock. Once, a bullish catalyst comes for the markets, and I know this is a long video, so I do apologize for those of you guys that actually watch these whole videos. I hope you guys truly learn a lot by listening to this. But I will tell you right now that stocks that have gotten beaten down in the last 6 months, once fundamental bullish catalysts actually come and materialize, CPI coming down, war in Ukraine ending, China lockdowns ending, the Fed not acting as aggressive, right? These things, once they happen, those are going to be the stocks that roar back with vengeance. 10 to 20% rallies on a given day, maybe for a couple of days on some of those stocks, if it's a really good thing, really good fundamental news, catalyst or something along those lines, would not surprise me. And that's why I want to be a net buyer of AMC right now, especially after all of this that we have seen. AMC stock continues to perform relatively well. And, this is something else. It says, only a meme stock reviewer would say AMC has been showing a lot of strength and that hedge funds are getting margin called and use internet search history as proof. Well, I've been in the markets for a long time. If you're new to the markets and you don't understand margin calls, you don't know what it looks like in any given market, then you just don't understand. And Digital Shooter obviously does not understand, and that's fine. And I don't want to call him out like that. But you can't be blind to this stuff. Like he's obviously just doesn't understand, how the markets are working right now. And it's obvious to see margin calls are happening. That's what's fueling this market. But as fast as margin calls come, it's usually a sign that you are getting close to the bottom, unless something fundamentally really starts to deteriorate in an even bigger way. It just, that's how it works, right? Margin calls happen, people get margin called, and then it's like, oh, well, maybe we should buy stocks again. So once obviously good news comes out. So that is pretty much going to be all for this video. A damn fly flying around in here. So thank you guys. Hit the like button, subscribe to the channel. Do what you guys got to do in that regard. If you guys want to show support in that way, let me know your thoughts on this. Source your comments, questions, or concerns down below in the comment section. Get your free stock with Webull, Moomoo, and Public down below in the description of this video. And as well as that, if you guys want to come trade with me live in real time, link down below in the pinned comment. Thank you for watching, and I will see you in the next one.